Hi everybody, this is TJ with the Backpack Trader. I want to do this video about these commodity ETFs. Yesterday, our friend Romulus was kind enough to post these suggestions in our trade hacking club. You could see right here, he mentioned these 5 symbols: DBA, DBC, corn, soy, B, and WEAT. These are all different commodity ETFs. And he really got me thinking, so I took a closer look at these symbols, and that's what this video is about. But before I start, I just want to mention how grateful I am to have Romulus in our midst. He has been amazing. He's a Wall Street pro of 27 years, a hedge fund trader. He's learned from the best technical analysis masters, and as a result, he is also a technical analysis maestro, and we're really lucky to have him in our midst. He's become an active member in our trade hacking club, and I'm doing some things with him that I'm really excited about, which we'll be announcing going forward. I just can't say enough about Romulus and how thrilled I am to have him as part of our Backpack Trader team. And so when he posted these suggestions yesterday, I wasn't going to second guess it. I mean, it instantly made sense to me. I didn't even think of looking at these ETFs. Clearly, we are in an inflationary cycle. How long it goes, nobody knows. But a lot of answers are written in the price action itself. You know that I've always been a believer in that. So I thought I would look at these 5 symbols, and I've got this chart set up for you here that you can see the monthly charts on the top, the weekly charts in the middle, and the daily charts on the bottom. And we're going to look at Counterpunch Trader on these charts, because Counterpunch Trader is, literally like a crystal ball. It called so many of the disasters before they happened, providing with amazing short opportunities. Check out what it did, what it reveals to us looking from the opposite side, from the commodity side. So let's start with this ETF here. This is DBC. It's the Commodity Index Tracking Fund. And this is not something that I would recommend trading options with. Maybe you could, I don't know. The volume just isn't there. Clearly, the volume is really light. But this is a monthly chart also, and we'll look at some daily charts. But I still think that this is the kind of trade that you could either trade the shares, or you can look to take long-term trades, maybe in an IRA or self-directed retirement account, to just get some exposure to what could be an upward trend. And no one knows how long this trend can go, and that's why I thought I'd look at the monthly chart. But let's look at where it bottomed out. Right here, you'll notice the date is March 31st, 2020. Everyone remembers what happened at that time. This was literally when the COVID-19 plague slammed into us from the very start. We were just learning what it was. The markets crashed, the markets panicked, and that represented the bottom of a long-term trend down in this commodity index. And then it started to move higher. And Counterpunch traders started picking up these long trades on the monthly chart. Not necessarily a chart that we're trading, although, really, you can. You could use this to guide you. So we could drill down and look at the weekly chart and the daily chart, and I will, but I just want to look at these monthly charts on these different indexes first. So this one is the Invesco DB Agriculture Fund. So agriculture is obviously an important commodity, and they definitely respond to inflation. Look at the bottom here also. This was in a month later, April 30th, 2020, still digesting the COVID thing. We're still learning about lockdowns and masks and all kinds of horrendous things we had to cope with. Of course, sickness, losing loved ones, trying to survive, all that. Meanwhile, was this a foretelling of what's to come? Because let's face it, price action kind of reduces everything down. It reduces down the collective wisdom of the market itself, which is literally the world. Knows more than anybody, if you ask me. It's just my opinion. And you can see that the trend is well on its way. And is it late in the trend? Is it early in the trend? I would say that it looks like it's still early in the trend, because look at the 50 moving average. It's just starting to bend up. And what we know is that if this is a trend that's going to have legs, the 50 will come up, it'll test the 200, and if it's really strong, it'll keep going, and there could be a lot of room left. Of course, time will tell. Who knows? Maybe it hits the 200 and starts moving lower. It could test these lows again. Nobody knows. But so far, the trend is pretty strong. How about soybeans? Again, you could see down here, I mean, obviously, this is at the end of a trend here, but look at how the 50 moving average has crossed over the 200 and it is extended its way down, and the price action way below the 50 and then the bottom, right? So now when we follow it up again, we have a strong leg up, a good reaction into the 200 moving average, a subsequent leg up, testing some significant levels over here. It'll be interesting to see if it can get above this level over here. I mean, this is literally 20 years ago. And the 50 moving average is coming up to meet that 200. The 200's bending up. There's a good chance this will keep going. The trend is your friend, right? This is a monthly chart. Now, there's some really good day trade and weekly trades inside of these long monthly bars, obviously. Same thing with corn. Corn hasn't really moved quite as much, but you could see that the bottom still a little bit behind schedule, but not by much. Took a few months down here, but here you go, March, April 2020, and then it started turning around late that summer, and then you could see it's been going ever since, and we really haven't gotten very far, but we're certainly testing some key levels here at that the 200 moving average, which is just started to bend up. One more look at wheat. Wheat is the laggard of the group, and that may be where the opportunity lies. I don't know. I can't claim to know really enough. I just follow the price action, but you can see it just really hasn't had the same price extension. Wheat can be explosive. We've seen it. Certainly was on the downside here. And you can see that it's barely started to take hold. And you ever heard the saying that it's often good to buy the worst house in a good neighborhood? Well, maybe the opportunity is in wheat with the most upside. Who knows? Again, I'm just kind of thinking out loud here, but we could use Counterpunch Trader to give us good trades. And at $7 a share, you could load up some shares here and hope to make some double and triple digit gains without even trading options. So again, the volume has been, under 1 million shares a day on these ETFs. So I'm not sure if options is the way to go. Maybe in this case, you load up some shares and look to hold it for a while, and maybe trading it in a retirement account could be the way to go. Anyway, to get trades, you can invest, you can buy and hold for the long period of time following that those monthly charts, but you could drill down. Let's go back now to the commodity index tracking fund and the weekly chart. You can see that it's been stair-stepping its way up, and the 50 moving average has crossed up and over. So there could be some downside short term before it resumes, or not. There's just no way to know. The trend could be your friend for a very long time, but you could see that the weekly trades to the upside have all been money. Cha-ching-a-ling ding. And now, of course, this one hitting its third target quite accurately. A pullback is, seems likely. Like, I wouldn't be jumping in right now. We could use maybe the daily chart to time some long trades. I guess it just depends on your outlook and if you want to hold for the longer period. And if you believe that inflation is here for good, or maybe it's already run its course, or it's coming to an end, no one really knows, again. But we could follow the charts and follow the trades. Again, on the monthly chart, the 50 moving average is pushing up and hasn't met the 200 yet, but there could be a lot of up and down in the short term before it ends up resuming. Like, this is a pretty long bar to the short side on the monthly chart. The trades would have been down on this month, but the long-term macro trend so far looks up and strong. And of course, on the daily chart, we can use that to time trades too. And there was a good trade right there, and it's just stopped out with the trailer. Now keep in mind that I did not tune these charts at all. I just took the default settings, copy paste, and that's it. So, you know, is there a better way to use counterpunch with these charts? Maybe, but I like to just look at the standard default settings without fiddling too much, just to get the big bird's eye view point of, you know, perspective. And you could still see trades. The winning trades are typically going to be following the bigger trends. That's where your best odds are. So daily wise, a new setup could be imminent. We'll see. I'm just going to quickly go through the weekly charts now. This one is the agricultural Invesco index, like I said. And again, you could just see that the 50's already crossed up and over, but it's picking up momentum, and it just stabbed up and through. So again, do you trade this or not? I'm recording this very early in the morning. By the way, did I mention I'm in beautiful Mendoza, Argentina? Yeah, I am literally the backpack trader this month, and thought I would do this video from my little place in Mendoza. All right, so write down these symbols. Check it out for yourself. DBC, DBA, SOYB, CORN for corn, and WEAT for wheat. I'll let you do your own analysis on this. You could easily put any trading strategy that you're using, and it's probably going to reveal something. Of course, counterpunch just has the uncanny way of being able to put you in the right place at the right time for high percentage and accurate trades. Just a quick look, like the last one on corn. You can see corn is definitely giving some really nice day trades to the upside. It started back with this one, and this one just kept going up and up and up. The trailer picks up right here, but along the way, there were all these additional setups. Yeah, there's a short trade from time to time you have to be careful with, and maybe use key levels to adjust around and try to avoid, because when the long-term trend up in inflation and the odds are better to the upside, maybe don't even take short trades until you have some sort of short-term topping formation or whatever. You might catch a reaction on a monthly chart with some nice short trades, but I think the better odds are long. The last one right here, poking up to a perfect target one and then stopping out at break even. So there could be a new setup coming up on corn. But the whole point is that there's some opportunities in these commodity index ETFs. And I'm really excited. So I want to go full circle and bring Romulus back into this conversation. He has a style of trading, a fast strike style, where he's looking at his unique method with his many years of experience and identifying fast strike trades with very high odds, winning 86% of the time. And I will be coming out with some more information on that going forward, because he and I are teaming up on something that we're really excited about. So stay tuned for that. Think about adding some sort of commodity exposure, and maybe think of it more as a mid to longer term investment style of trade, long-term position trade. And you could trade inside smaller trades too, drilling down to the faster charts like these daily charts, but just realize that you may not get the leverage that we like to get, because options trading may not be the best way to go with the lower volume, and just buying and riding out the longer term trend could be the way to go. All right, there are many ways to trade. There's many ways to make money in the market. And what we want to always be mindful of is what the price action is telling us, in conjunction with some historical context and what's actually happening in the world and why. And I think we know why inflation has hit us. And I'm not going to get into the politics behind it, but I think we're all aware of what's happened over the last couple years, unless you've been like living in some cave in a mountaintop like a hermit without any electricity or internet. We're all pretty much in tune to what's going on in the world these days. All right, so I hope you enjoyed this video. This is TJ with the Backpack Trader. Remember, we trade to give ourselves a better life. We want to spend less time in the markets and more time enjoying our life. And do your best and strive to become your own best version of the backpack trader. And that doesn't mean you have to schlep a backpack around, although you might want to. I am. I'm in Mendoza, Argentina as I'm recording this, checking out the beautiful countryside and the famous Argentinian wine from this region, which I really enjoyed. But in the end, it doesn't matter if you want to trade from your own sofa, Mendoza, the Siberian Express, whatever. When you're your own best version of the backpack trader, you get to call your own shots. Everyone have a wonderful rest of your week. I will see you on the next video. This is TJ from the Backpack Trader.